we've got Umesh Revankar, who's the Executive Vice Chairman at Shriram Finance, now joining in to discuss that and more. Thank you so much for being with us, Mr. Revankar. To begin with, the RBI has zeroed in on 15 NBFCs, placing them in the upper layer category. You're said to be on that list. What is your initial assessment of the impact? Are you in compliance with most of the stricter regulations? And if not, what measures would you have to take in order to comply?
Good morning. I think this is a 1 year old because the list was already announced earlier. They had revised the list now. So we are already into the system or into this new dispensation for more than a year. But before that, RBI did indicate on the upper layer and other layers for more than 3 years back. So all the NBFCs who are in the upper layer or whichever layer they are in full preparation, and they understand the requirement and also the regulatory supervision and the regulatory requirements. This has all been addressed, and we have been continuing with this for nearly 3 years. So we don't have anything to have surprise on the same.
All right, fair enough. I just want to move right on and talk about your overall segmental growth, vehicle financing, MSME, gold loans, etc. Can you just walk us through how these segments are performing and where is it that you're seeing leadership or an outperformance in terms of sector?
We are clear leaders as far as vehicle financing is concerned, including the two-wheeler financing, because all vehicles, all commercial vehicles, we are the largest leader there. And in the two-wheeler, again, we are the leader there. We have the largest presence across the country. So we are continuing with our growth there, and we do see a good growth opportunity because there are two things. One, the sale of new vehicle is continuing to be good, and it's growing month on month or even year on year. Plus, we can also observe that the resale values of vehicles are very strong and good. That really helps us in asset quality. So when the resale values are very strong, that means the demand for the second-hand vehicle is very good. The economy or the overall the activities are utilizing the vehicles or the machineries or tractors or all the equipment that is being used in the economy. So that all sounds very good for us. So asset quality continues to be very strong and improving quarter on quarter. I think the credit growth will be a decent one. For us, we have already given a long-term guidance of 15%. But first quarter, we did have a good quarter with around 18% AUM growth. We should be able to continue to grow in similar lines.
And do you expect the pressure on your NIMs to ease as well going forward?
See, as of now, NIM will remain at current level. It may not ease immediately because the indication from the inflation and RBI standpoint and overall liquidity in the system is likely to remain at present level or maybe a little tightened next quarter or two. It all depends upon how the agri output would be. The Kharif output would be something we'll be knowing in the first week of October because there has been disruption in the rain. And as far as Rabi crop is concerned, I think the rainfall has been reasonably good. Catchment area, there is good rains. So that should really help in Rabi crop. As far as Kharif, there is some uncertainty because of delayed rains. There is nothing to worry about. There is not much of a shortfall in the rain, but there has been delayed rain, and which we would like to assess by the end of September or the first week of October. So once we know that, then the inflation concern are addressed, especially on pulses and the vegetables, etc. I think then we should be able to easily gauge the RBI mood or the overall indicative on the liquidity that is being available. So as of now, we do expect a little tight liquidity for next 2 quarters to contain the inflation. So that will make the NIM expansion little challenging, but we should be able to maintain current net interest margin.
But with ICCR dilution, don't you think liquidity will actually come back?
It should come back because right now in September, these advance tax, the money gets little locked. So there is a temporary shortage of liquidity, but it will come back is what I feel. I think next couple of quarters it will definitely help us to gauge the mood of the country and also the economic growth that is possible. So if the economic GDP growth continues to be above 6.5, I think we should be having a very good year for the full financial year.
Okay. If I look at the economic data, two-wheeler sales are not there, HFCs are not picking up. There is a stress. It could be agrarian economy, it could be the COVID shock, but the rural economy is not recovering. In that kind of a backdrop, we've had poor monsoon. So I'm sure it will have an impact either on demand or repayment ability by borrowers.
See, the way I look at is I am not looking at the benchmarking of two-wheeler numbers on par with the 2018-19 numbers. If I compare the 2018-19 number, the two-wheeler numbers are not great. But year on year, it is growing at 10%. And even month on month, sales are good. So I don't really see stress there. See, there is also a possibility that the people are shifting from two-wheeler to car in certain pockets, especially in the southern market. I do see increasingly the used vehicle, two-wheeler is getting mature, reaching a particular level of what call maximum limits, and people are turning to own the four-wheeler. So there is more wealth that is getting created in the rural. I do agree that there has been some kind of uncertainties on the rainfall or disruption in the rainfall, but overall rainfall has been good. It is not deficient as per the definition of deficient. So that means there has been rain, a little sporadic ups and downs, but even last year it was same. But rain kept continuing. It is disrupted rain, but it continued in month of even September, October. So I think there should be a reasonably good expectation on the rural economy. And government also has increased the MSP to larger number of agri output. So I think that all should help us.
The other thing, Mr. Revankar, I wanted to understand was about the progress that you've made so far with regards to your tie-up with Paytm to get on their digital lending platform. Tell me, what is going to be the nature of these loans? Are they going to be largely unsecured?
Basically, what we intend is Paytm is in the system for more than 10 years now. The way they started, and they have built a huge franchise of good merchants and good manufacturers on their platform, and they have a track record. We would like to lend to small merchants. We are targeting small ticket only, around 1.5 lakh ticket size lending to the small merchants and distributors. So that they can manage their inventory, or they can manage their working capital requirement. So that is the agenda, or that's the plan. So we are to build a credit rule engine and start lending on it. It will take some time, but we should be able to do it. So it is basically to reach out to the customers whom otherwise we are not able to reach. Even though we have 3,000 plus branches and large field force, some of them would be out of our reach. So we would like to reach to them and offer them through a digital platform, so that entire transaction will remain on the digital platform with less supervision or less physical requirement or touch point requirement. So that's the idea behind it. And once the initial test gets successful, then we will expand it. So initially, we would like to restrict it to a small geography, then we'll expand it.
All right. And I just wanted to also get in a sense from you as to what the outlook is and some of the measures that you plan to take in order to maintain your overall asset quality.
The overall asset quality has been improving for last 5 quarters, and it is likely to improve for next 2 quarters also, because the overall underlying economic activity, demand, the utilization of vehicle, earning, everything is positive and good. We hardly see customer not able to pay because of the economic condition, or not able to ply his vehicle, use his machinery, surrendering his machinery. Nothing is that happening. In fact, this repossession and the taking back the asset is virtually nil. So to that extent, there has been excellent progress for all our customers. So I do see there is an improvement in the asset quality going forward. Our credit cost in the first quarter was 1.67, much below our long-term average of 2% credit cost. That means we should be able to continue this good run for a longer time.
That note, Mr. Revankar, great to have you on the show. We'll let you go on that note.
Thank you.